As someone who is in the market for more than 2 decades now, what do you think about when you see volatile market? Is it a good thing, or is it a bad thing, or is it a thing to just maybe be more careful about, or kind of what comes to your mind when you see this?
Well, the first thing that comes to my mind from a trader standpoint is, wahoo. Like I mean, the greater the boat rocks, the greater my haul of fish, basically. So I mean, we live on volatility. We want that boat to be rocking. So yeah, and I mean, no movement, really no opportunity. However, what everyone needs to know is the principles of risk and reward never change. So people look at it, or traders will look at it as like, "Ooh, this is a greater opportunity for reward." But wait a second, what about the risk side? That's changing too. That's increasing as well. So we need to sort of, respect that balance because it will never, it's math that keeps that balance there. Higher reward, higher risk. And what we're seeing is that, sort of the phone's lighting up a little more, the email bin is getting higher, is that, okay, I want to take advantage of the reward, but I don't want to compromise my risk. And that's where the problem lies.
Interesting. What in terms of risk is more risky? Is it more the aspect of price move faster, so could step you out faster, or it's more the aspect of how you react to being stopped out more often, or how you react to like all these moves happening in the market, or how much FOMO you put into it, how much you jump into trades too fast? Is it more the math behind it, the risk, or is it more the person behind the screen who is the most dangerous there?
Yeah, it's very interesting. I mean, this is sort of a big sample size in my career. When I see these sort of high volatile markets, I kind of dissect what's the sort of root cause. The first thing is, like I just mentioned about, they don't want to adjust, traders sometimes don't want to adjust their risk. So the first real key takeaway is you got to reduce size in these markets. They'll pay you. I mean, there's really good opportunity here. Just, put less size and you'll have those rewards. Everyone tries to look for these home run opportunities. When you keep your risk the same and you expecting a higher reward, you're kind of a sitting duck. You become more of a sitting duck, especially with those stop outs. The reason why we see people losing for the day or meeting their max loss for the day or maybe even blowing an account, it really wasn't the opportunity. It was they didn't adjust their risk to accommodate that vol. And lately it's been sort of unknown vol, unannounced volatility. So you get a lot of these like sort of stop outs when they weren't getting stopped out. So you do need to respect that. This is a risk manager talking. You need to widen those stops a little bit, even at lesser size, to allow for that noise. And when traders don't do that, they keep that. My rule says 18 pips. Well, guess what? You're just a sitting duck, ready to be, ready to be eaten.
Interesting. Yeah, definitely. How should traders adapt based on the levels? Tell me about a beginner versus someone who's more intermediate, someone who's more advanced. How would they adapt to volatile markets, to market being really fast and really crazy?
Yeah. Well, the first thing I think needs to be done is this is really a point where I really want the newer traders to sort of link up with another trader. It doesn't have to be a coach, can be an accountability person, because what I've seen is that, and I could feel just in the words and the verbs used in text and chats that like this excitement. There's lot more lights flashing in a volatile market, and it sort of, lures the wildebeest into the jungle right next to the sitting lion. And they look at this opportunity, and next thing you know, they get really beat up. So it's that, take a step back, reiterate what is your plan, what is your trading plan, and really want to focus more on math rather than sort of the excitement of the lights. Obviously, don't do it alone, especially in the beginning. But here's sort of a an interesting option. All right, I know this is probably freak a lot of traders out, but you know when there's like a big tennis match and it starts to rain, they hold off, they postpone, they say delay and wait for the rain to stop, and they go in. It's okay to just take a step back and watch and observe. Yesterday we had a big Fed announcement. I saw traders all excited, this and that. Oh, you ready to go? Little emojis and stuff. Hey, it's just like this is a good opportunity where the pros step back, let it play out, and then you can play the reaction as opposed to sort of having to be in on a trade. Very newbie like. There's an option. Take a step away. That's what the pros are doing.
Anyway, if you guys are joining us live, make sure you comment below. Post the comment in the comment section of the chat that's live here. Tell us where you're from, where you're watching this from. We'd love to hear who's there and who's watching. We'll be able to kind of get going more in a minute and just kind of want to make sure it's going to be applicable and that we can actually target some good advice and maybe answer some questions. So, any questions you guys have, make sure you go and comment below. I'm going to keep an eye on the comments here on the right side. So, I'm going to look away from the screen a little bit
Hmm.
and have a look at who's there and what's happening. But any questions you have for Michael or for me, put them in the comments. We'll be able to answer them. and we should be good to
Yeah.
answer your questions, give you some value here for this live stream. So go ahead and put a comment, and we'll see how this goes so far. Awesome. Great. So when it comes to volatile markets, how do you adapt the way you trade? Is it the same strategies you focus on? Do you change the rules? Do you tend to maybe change the take profit, change the stop loss, or do the same thing you've done before?
Really good question. What I see a lot of traders trying to do, they try to just change things up. At the end of the day, and this is sort of like a change management sort of philosophy and stuff. It's a lot of times when people make change, it's very often the original format, whether it's in corporate workflows or in trading plans. The original set of rules was the one that probably would have worked the best. Now, in volatile markets,
Mm.
the key is not to change the context of a strategy per se, but adjust it based on certain parameters. So an example I mentioned earlier about, okay, volatile markets, we need to adjust based on the ATR, for example, or volatility. We're going to widen stops, lower size, and things like that. But really, the framework, the context of the strategy, oh, I'm going to wait for a pullback to the moving average and enter that. That's all the same, right? That really shouldn't change. In fact, one of my better trades this month really had those basic principles, and I was actually kind of I shouldn't be taking this, but you know what? My rules tell me I have to do it, and then it kind of built and snowballed into one of my better outcomes. But the principles there is really I want traders to stick to the plan, but adjust the sort of risk parameters to do it. But as far as entry trigger, just stick to the plan. That's usually what will work best.
Interesting. We're gonna go to your trades and your P&L, so people can stick around for a while just to kind of get to look at that. It's gonna be a cool inside look that honestly you don't really share about too often. It's good to see that, like see how much you're making and what kind of trades you're getting and what kind of results you're getting to these markets. But tell me a bit more about the mindset of volatility, because it's one thing to understand volatility. You can make more money and stuff. You can have more losses. How do you get to the right mindset for thriving in volatility, being able to really make the most of these current market?
Yeah, I think what we try to do is more humans than actually traders is we try to interpret the why. Like, oh, why? Oh, he's speaking. He opened his, a lot of crazy stuff in U.S. Political scene right now. But who cares? I don't care about tariffs. I mean, I care from a personal standpoint, but from a trader, I want all that to be noise. I'm just trading price action and movement. Why it happens is not important. And I look at some of the dialogue, and it's like, well, this happened, or this, or they're going to announce this. I really don't care. I'm just going to base my focus is on doing my job as a trader, and that's trading the charts, the price action, and really ultimately trading my plan. So kind of weed out that noise. Take the CNBC and Bloomberg off your screens, and don't necessarily worry about that. Just focus on your job as a trader. Sometimes keeping this stuff simple, even in crazy volatile markets, is really the best way to go. It really allows you to focus on what you really need to do. And I admit that noise can get crazy sometimes. Like, oh, I said this, but it doesn't matter. Price, it will reflect in price very soon, if not already.
A lot of what you see on the news is about them trying to predict, oh, is the market going to go back up? Is it going to go more down and kind of crash more? If you kind of always watch this, of course, you can get drawn to these stories and kind of have a bias behind it. Do you try to go and let's say buy the dip, or do you try to just focus on trading both ways and even sell if you have to at some point?
Yeah, I try to stick to really my like core mechanics of my trade. But what I will try to
Mm.
do is there's two facets of it that I really want to focus on more, put more heavy weighting into my sort of narrative. The first one is really not buy the dip. It's about holding more. All right. I'm going to tend, a lot of people ask me, do you trail or, do you take stiff targets? Well, again, it depends. What? Depends on volatility, things like that. Generally speaking, my default answer is not every time. But I'm more open to holding and trailing and actually adding to winning positions much more aggressively. It's sort of A plus setup time. All right. I want to be more aggressive and have the ability to hold. It is not easy. I mean, I was sweating bullet. I don't sweat as a trader too much, but I was walking around like pacing and stuff. It's tough, especially like during short covering rallies when you're short. So the two things I would say, think about more of a mindset to trail and to hold. And the other thing is to look for the other side. What's the other trader on their side when are they going to start to worry? So I want to take advantage of panic. I always do. It's kind of like my number one, sort of setup is taking advantage of panic. But when you have shorts like piling in, it's great, especially if you're short. But at some point, you got to say, when are they going to start to get nervous? And when they start to get nervous? When things aren't going down every day. All of a sudden, you see that sort of muddling and, short covering rally, pull back, didn't make new lows. They're ready to panic. I want to be on the other side of that.
How do you see panic on the chart? What are some things you look at to determine how much panic there is?
It's the $1 million question. And I think the question you mentioned, Tian, is great because you mentioned the word chart. And I the challenge I have, and especially either as a trader, but even as a coach, everything is just so focused on the candlesticks. Do I look for engulfing candle? Do I look for, I mean, you know, you want to look for certain patterns like this sort of like on the bottoms, like where things are failing, W patterns or M patterns at tops, and that's one of the trades where this M pattern at top, where just why aren't they making new highs? Like why are why are the advanced decline lines fading at new highs and things like that? But those are sort of the initial movements. But I use Heiken Ashley from a visual standpoint to say, okay, I think I see this potential for panic here. But Heiken Ashi bars, I mean, it's kind of like that 12-year-old color thing where I say, all right, now I'm in. Now I'm going to not only start getting in, but I'm going to start adding weight to those positions. Heiken Ashi is a great tool beyond candlesticks. I think it's very underutilized because it keeps me in trades that are working, where sometimes the candlesticks and Gulfing candles and stuff, it kind of weeds me out. So the principles of panic are pretty simplistic as far as price patterns, like those M and W's at the bottom, where like, hey, where are the sellers? Where are the buyers? Like, how come they're not pushing it? I always ask myself that. But the Heikin is the visual that says, all right, we got panic here. I'm loading the boat.
Interesting. So changing the color of a can actually would be a indication that the sellers are taking the other side, for example, right? So you
Yeah,
see the other party taking control.
it's in my eyes. I mean, I want to get in as early as possible, almost to the point where people are looking at me like, "Wow, you're going short here? Like you're shorting Nvidia? What are you nuts? That kind of thing." But I want to get a piece. I want to get a piece, and then once I see the panic happening, and then I start to see like sort of visual confirmation, like Heiken Ashi bars on a daily, breaking like daily VWAPs, breaking hull moving averages. That's where I want to pile in. That's where I want to say, okay, now I've reached my A plus setup. I validated it. I already have a piece. Now I'm going to really add size, stop above the highs, that kind of thing. Like you want to stop me out market, go reverse and stop me at the highs. Go ahead, because now I got my wall of protection. Also, I got pretty good average entry price, and I can work it that way. Now I'm going to kind of rely on that 12-year-old trading 101. Ooh, color change to red. Okay, I'll get out when it turns blue. That kind of thing. I'm in the driver's seat and I can relax.
Lakeland, Florida. And Asif is also there in the chat. So welcome, guys. Good to have you here, of course. Any questions you guys have, make sure you comment below in the chat. Tell us where you're from. That would be good to know also. If you just joined us live right now, make sure you are interacting in the chat. This is live, so good way to ask any questions and good way to just talk about different things about the market too. Michael, do you want to go through a trade you had recently and kind of how you played it?
Yeah, sure. And welcome, Kevin from Lakeland. I'm very familiar
Good.
with
So I'm gonna
Central Florida. Love it. Beautiful place.
nice. So let's go with this one over here.
Oh, sure.
You walk me through how this worked out and how you traded this, and then we can people can ask questions about anything after that.
Sure.
Make sure you
Well,
comment in the chat and ask
yeah,
any questions.
absolutely. Yeah, this is a recent trade I had. This is mid-February, so if you want to check on your own charts, a daily. I'm using the Nasdaq here. Why? Because yeah, S&P was making new highs, and the Nasdaq, which has been driving the markets, were not. I says, okay, there's a little divergence there. So if this is going to turn, Nasdaq's going to lead the way. Again, I'm going on that assumption. All right, 63% being right. So I started nibbling. Say that number one, number two, those little red arrows are sort of cells, little starting to get a position. We talked about Heikin before, right? I want to get a position. I'm looking at things and where are the buyers? Like they're pushing it. See the last 2 or 3 days, that number one, number two. How come they aren't making new highs, right? So I started adding short positions. Again, those initial trades where people think you're crazy, right? It's okay if I lose those. My stop is pretty close, so I'm all right. And I'm relatively small. Then I start seeing the breakdown. Now I start seeing, we're not making new highs, we're breaking moving averages, and that big red bar right between number 2 and 3. That's where I start piling on. Okay, now I have sort of validation that there's something going on here. Does it mean I'm going to be right? No. Now I'm in hold, add, A plus setup, full quote, full size. Not again, I'm not risking my life or anything like that, but full size in regards to my current plan. All right. 4 and 5, you see more breakdown, add. This is a lot of times where people take profits too early. This is where I'm sort of going for, I have stops at break even, so I'm risking sort of a decent, P&L. Now the biggest challenge I have is holding. And boy, if you're short, and even in this type of big move where the Nasdaq dropped 10%, there were some short covering rallies where I had to walk away. It was tough. I was like biting my nails. I mean, talking like 5-figure bounces, right? Not good. But setting my target for I use a simple Fibonacci 1.27 extension for the first target. And if I'm so blessed, the 168, which you really don't expect, but sometimes the market gods give it to you. But when you look at this chart, and let's look at the simplicity of it, just when you see those changes like that, it's not just a change in a color on a bar. There's price behavior. There's people panicking behind that, right? Take the other side, go for it, all right? And then, work your way. And again, as far as the targets, you hope you get paid. This time it did. But you could see in some of these, we'll show you some sort of, price results and stuff in a minute. But, some of these movements were pretty big, but you just have to stick with it, stick with the chart, stick with the plan. And in this case, it paid off.
Nice. Any questions? Post them in the chat, guys. We'll make sure to ask questions to Michael on this. But one thing you told a few days ago, we had a discussion about trading in general, and you said in these markets, I have rules that if I see a setup for my strategies, I have to take it. Like there's no way you're not gonna take it because it's the rule, and you gotta force yourself to take setups that maybe you're not really comfortable with or you don't really believe in too much, but you still take them anyway. Tell me how that rule kind of shapes the way you trade and why it's important to have that kind of rule.
I mean, I always like to, we don't know. We don't know anything. Everybody says, where do you think price is going? I have no clue. And you know what? I don't have to have a clue. I just need to execute my plan, which has a positive expectancy over time. Now, when markets are making new highs, all right, and there's some divergence, see, like in this, number one, number two, those like first three position settings, they're relatively small. All right, I'm kind of getting my feet wet. So the worst that happens, it hits my first target, stop to break even. It's okay. It's a trade. But I really want traders to understand if this is your math behind this is your strategy, has a positive expectancy. Ask yourself, why wouldn't you take that? Right? It's that important. My job is to take those trades. That's what I'm paid to do. Are they all going to work out? No. But if I have a positive edge, there really should be no reason I'm not going to take them. Now, I may adjust size, but that's my job. I'm not going to leave math on the table. So I encourage people to be more mechanical. We tend to, and I do this too, I'm guilty. You start thinking about things. And once you start thinking, right, you start thinking about, oh, Trump tariffs. He's going to announce, he's going to raise Canada. It's now all of a sudden you get stuck into that like newbie mishmash. Trade the friggin' plan. It just, over time, it's better than your brain.
I like it. That makes sense. Definitely. Um, your strategies are very mechanical too. Do you see any benefit to discretion and being able to look at the market, understand kind of what's happening with the news, and trying to figure out the trade with that, or are you just fully mechanical all the time, 100%?
I mean, I try to be mechanical, and on the managed side, the managed accounts I oversee, they are paid to be mechanical. Absolute zero news, no TVs in their offices, nothing like that. I mean, it's actually a violation of our sort of charter. All right, but I try to be mechanical, but I'm also a human being, and sensing that there's a train wreck coming. I mean, there was a little bit of a bias saying, okay, I've been long here and stuff, but there's going to be a train wreck somewhere, particularly in the U.S., and I want to be in an early part of it. Sometimes sort of everything sort of lines up, and is there a little bit of luck in holding for a 10% move? You know, maybe something's lined up, particularly on the exit. I think I got a little, the trading gods, accommodated me. But you know, I've always found, and I've done journals, my own journals as well, including traders, where the less you think, the more mechanical, and you trade the math, trade a positive expectancy. I just think overall the results. You can pick it sometimes, but those are the ones that sort of a term in psychological cognitive bias where you remember those ones that you sort of picked. Oh, you knew it was going down, but in the end, I'm just going to go with the math.
Of course, how much do options play a role in high volatility? Do you feel like it's easier to trade options, or do you feel like regular trading is better, or which one do you tend to go to?
Well, it's a good question. I find that I'm a futures trader by heart, but if I know I'm trying to accumulate for a relatively swing position, it's kind of tough to hold futures positions over the weekend and overnight, and just even a smaller size. But what I will do is, in this particular example, I went the options route. So I shorted the QQQs. Another third was I went long the puts on TQQQ, which is sort of a double NASDAQ short type of venture. And I also had positions on the VIX in a separate account, VIX calls. So I just felt that was the best way to use my dollars the best, as opposed to like buying, shorting Qs. Options play a very big role. Also, I was selling premium at the highs. So there's a lot of like little things going on. But the bottom line is the overall portfolio of this trade was, totally net short. I mean, totally net short. So I find options are sort of underutilized to an extent. You have to worry about theta decay. I get it on the long side, but you can sell premium on the other side to sort of make up for it. But sometimes future markets, I love futures markets for day trading, but if you think you're going to hold a position, it's going to be a swing position, probably not the best route to go. Not good for your buying power as well. Hope we didn't lose ATM there. Maybe I scared him with my trading answers. Who knows? Let me see if we can go to the chat and see if I can have access to the chat. We do. And thank you, Asif. Great videos. Keep up the good work. Great. Thank you. And Asif, thank you for your support and watching us. And if you have any questions or any thinking about, where, we'd like to do, any videos you'd like us to do, I'm open game too. I'm always looking for those type of things. At the end, I took over the role. I took over the controls. I'm
Yeah, I
answering
got
some
that. No
questions.
worries. Totally get that.
Cool.
Yeah, yeah.
Yeah. But thank you, Asif. And any questions out there, by all means, like send them to we look at the comments, the good ones at least. And, a lot of the videos that I'm assigned to do come from those suggestions. So bring them on.
Makes sense. Definitely. Where can we go from here? So you talk about discretion versus mechanical. Of course, volatility. Is there any difference to how you place your stops when you have a lot of volatility in the market, or do you still place them the same kind of place you put them?
Yeah, well, I'm notorious and I'm sometimes criticized. I want to put my stops behind a wall. I want the market to come and say, fine, if you're going to beat me, you have to do this. All right. I don't, I'm not a big fan of these, behind the engulfing candle kind of stuff, 5-minute bar. You're just a sitting duck. Now, do I take more risk? I take more exposure, but my size is adjusted for that. So I'm a big believer in that. Now, in a case like this, the good thing about getting in sort of quote unquote early is stop above the new highs. That's a logical place. You're going to make new highs. You got me. You beat me, and I'll give it another shot again. All right. But once price starts going in that direction, I want to sort of reduce my risk. But this whole stop to break even thing is just some oddity that I'm still not understanding. I guess it's the mindset where people don't want to lose on a trade, but market doesn't care about your trade. So in high volatile markets, you want to give yourself some room, because a lot of the traders that I've seen that are having problems or had another rough day, and all of a sudden the emails start coming, it's really their setups were fine and they're trying to do what they're doing and they're questioning their strategy, which I said, I don't think it's your strategy. It's your stop management. Again, they're looking for those big rewards and not adjusting risk. So give yourself some room. And if it's too much room, because sometimes it is, like in a case like this, in this bar, that big red bar, maybe you want to go short there, which is valid, but that stop has to be above to the highs. Pass on it. It's okay. It's okay to pass on trades. It's okay not to participate in this crazy volatility. Our job here as coaches and managers, and myself as a risk manager, is to keep you solvent and keep you there for a very long time. And In the case of a 20-year career, you don't want a 3-week, news flash, section of U.S. politics going nuts to be like the catalyst for your demise. I think it's absolutely crazy. Sitting out, probably the best move if you don't know what you're doing. New traders, learn from this. It's a really cool experience, but don't let it cost you any money.
So you're saying you don't move your stops to break even at all?
Could I say this? I think I'm going to say this, and you could always edit it out. I think it's bullshit, actually. I think it's
We're
total.
live, so
It
you're good.
makes no sense whatsoever. Like, what's this magical number? And you know what it also does? You know what it promotes and what it confirms? Like when I do like audit validations, it confirms that the fear of loss. Think about it. Why are we moving ourselves to break even? We don't lose anything on a trade. Now, I'm not saying break even is a bad area, but if it's enough protection, like say this, the second or third red bar here. Okay, well, I want to give it 2 bars, and that happens to be, a pullback above moving averages and things like that. Okay, above a 50% halfback move, and it happens to be break even. Totally makes logical sense, right? But this notion of going to break even is almost, I can't lose on a trade. You're not being judged on one trade. You're being judged on a series of trades and how you perform. And when you give yourself a little room like that, it allows you for big runs like this.
So this Michael got. Let's see. Uh,
Something to think about.
and just that last sentence, you got cut off for some reason.
Oh,
Sorry about that.
that's okay. Give yourself some room. How's that? Stop with the break-even thing. You better justify it in your journal. Let's put it that way. Just if you have a stop to break even, let it be a price point which makes valid sense, not just because you don't want to lose on a trade. Nobody cares. The market can care less about your trailer.
Makes sense. Yeah, definitely. I mean, it's good to hear these things because you always believe these common strengths in trading. Like, oh, it's better to take a profit than take a loss, or like take a profit early is better than kind of letting a trade go into a loss. The break even, stop loss break even is a big one too. I think is one that is always repeated to traders all the time on YouTube and also on different blogs.
Hmm.
So it's good to kind of think about it in different perspectives too, in different kind of light. And I think you just kind of did that, so it's pretty cool to think about.
Yeah, and it's I'm not saying it's not for everyone. I'd be still working the math, but for your newer trader who
Yeah.
wants the confidence of like winning trades in the beginning, yeah, I'm okay with that. Like confidence is really important in the beginning. So I'd rather you lose opportunity to gain confidence. But once you're trading in the zone, you're in the section where you want to do this, you're executing your plan properly. Go with the math, and sometimes that means taking a small loss on a trade that would have worked out really well. It's okay. You're on your way in your career. Nobody cares about the one trade.
All right. I know you guys are coming here for seeing Michael's stats and seeing the results you've had in the markets. You wanna go to that, Michael, and kind of explain to people the results you've got in these markets, and also kind of maybe go and walk through how that happened.
Sure. I actually want to, yeah, that'd be great if you could pull it up. And it's really not about the dollar amounts, okay? Because everyone has different levels, and this is, kind of an A plus setup. I actually had other accounts that I had this short going on as well. So I was selling premium on, call premium on another account and stuff. But I want you to see sort of the dollar amounts, and I like to, and Etienne, you know this too. We always flush money out of our accounts on profits and put it into sort of safekeeping and then like reload and things like that. So this is kind of good because now I got reloaded on a trade. But in this particular account, if you'll notice in the beginning when those initial shorts were being put on, like the 24th, 25th, 26th, like why wasn't my P&L changing? You know what that was? That was the trade working, but all my longs getting stopped out. So that's I look for that. When I have trades, I look back in my past of trades that were really good, like I held to target, had patience. They all have that sort of pattern of it was working, but my P&L wasn't working. That's because everything else wasn't working. It was getting stopped out. But that's good. That's very healthy as part of the thing. And there's a time there where it gets very frustrating because if you're watching your P&L, there's a lot of times there where I could have locked in nice wins those first 4 or 5 days. All right. Oh, good. I locked them in because I lost on this, but I made it up on this. But really, the long-term longevity of successful traders, don't worry about that. They don't even look at their P&Ls. All right. Was looking at it, this, that, and then you could see around the 28th, 29th, now you're starting to kick in. Now my trade is starting to kick in. All my other stuff is stopped out. there's negative reds in there, like in some of that net worth, and then you really start seeing kicking. But if you look on the March 5th and March 6th, right, what was that all about? Short covering rallies, all right, and there was like 4 accounts I had some other positions too, so it all got hit, and it was all like on a Friday afternoon, the last day of the month, which is not good for sort of window dressing, but that's what happens, right? But if you start watching your P&L, I would have stopped out there. What happened? Just hold on, stick to the plans. The HAs are red. Things are going. There wasn't even breaking new highs, even though in short covering rallies, which are violent. I mean, 400-point moves in the Nasdaq. Nasdaq futures. Crazy, crazy, crazy. You know what? Stick to your plan. Took a little guts. I had to go to Costco a few times, right? Just get away from the screens, and obviously you could see it paid off. And those last few days were just a few extra last minute contracts just kind of working its way into closure, which was kind of good. So overall, I'm pretty pleased with it. I did an analysis and said, okay, but the value in this trade was not that nothing super special. The value was the hold, the patience to hold, and the sort of muscle to walk away and let the trade play out. That's where the money was made. You look at it. It wasn't those first 5 or 6 days. It was the meat of there, and then it kind of trickled over. So a key variable, patience and holding. We don't talk about that enough.
Yeah, totally. I mean, it's one thing to, like you mentioned, it's very tricky to, like you said, trade going in your favor. You see one going into a loss, you want to just book it and be done with it. Um, what gives you the confidence to hold? Is it the targets you set for yourself that you want to hold until these targets, or is it from experience going to work if you hold long term, or is it based on just kind of respecting the rules?
Yeah, it's a good question. It's in the short term, a lot of times these won't work out. You'll get the stop at sort of on a trailer, maybe not break even. You'll be in profit in that too at some point. But yeah, it's tough. But you sort of look, and I've made a commitment to myself. I wasn't that good at this either 3 or 4 years ago, but I made a commitment to say, if I really want to bring this to the next level, and it supplies, it supports me and everything, but if I do so, I need to hold more. So it's really, and believe me, this is not easy. I had other accounts as well, short as well on, premium stuff, not as big as exposure, but I had to ask myself, this is what you do. And by the way, I'm a coach too. I got to practice what I preach. So, some people say, why do you coach if you trade? It's because of a reason like this. I'm accountable to over 1,000 members that we have too. I'm here saying, hold, be patient, and I'm not doing that. So it kind of is the catalyst. And believe me, it's tough. Nail biting, running out, closing my platform. Just I was at lunch one day on this short covering rally, and I was meeting with someone, and I kind of was looking at my screen. I go, oh man, here comes the short cover, and actually had the pattern of where the sellers kind of thing. And I'm like, here we go. You got to hold. You got to hold. So, um, my catchphrase is, we're paid to be patient. This is a classic example of how many traders would have gotten out, even at the 88,000 mark. That 5 days in. Right, it wasn't easy, but you build that muscle, and you could do it on smaller size. It's much easier. When you have an A+ setup and you're kind of more on the edge of full boat. I'm telling you, I've been doing this for a while. I had a little sweats, but I made a commitment sort of to myself. So long-winded answer, but build the muscle, start small. But you have a job as a trader to do this. This is where we get paid, not these little 5 pips here and there, every day. It's big 2 or 3 monsters. That infamous one good trade, 2 or 3 of those a year, you'll be fine.
Love it. If you guys want to see more about how to trade this high volatility at these current markets, Michael and I put together a program on how to trade that. We have a whole playbook on trading high volatility. So go step by step through 2 strategies that work really well in these conditions. We went back, we've tested those strategies, which see which one performed the best, and we teach you exactly these ones, plus kind of how to manage the risk. A couple one things you can really learn. So check out the links. Give me the first link below. You can check it out. And we still have some time here, so we'll answer some questions and kind of go through this. But if you want to check it out, it's going to be the first link below. And now let's go to some questions. We have a question here from Zig asking about, did you trade FOMC yesterday, and how would you go about it since it sparked some volatility in the markets?
Okay, great question. Thanks, Zigzag. Love it, love it. By the way, I just posted a note in our member Slack channel. I'm gonna read it. I'll literally read it. Okay, this is what I did. All right, 70. I shorted the move when they were rallying, and it was like everything's fine, right? Like kumbaya, all the problems in the world are fine. It rallied I think the S&P was up like 70, 80 points at one point when Powell was talking. And I said, these longs are going to pay. Why? Quirky nuance. 72% of all reactions to a Fed announcement are repaired. In other words, that's a nice market profile way of saying reverts back to the original level within 72 hours. That's math I'm going with. By the way, this time it took 14 hours. In fact, I had a rough night's sleep the night before, just for some reason. I went to the gym early. I actually fell asleep during Powell's speech, and my shorts triggered while I was sleeping. I wake up this morning, the math works. So there was my answer to the Fed announcement. I didn't go crazy on it, but you know, so I was clear of my positions, my short position, that trade there. But now I'm starting to lean into making sure these longs who thinks everything's fine, I'm going to make sure they pay. And it was a nice little gift when I woke up this morning.
Interesting. Yeah, good one. I love it. I was asking if you ever thought about doing a live trading session in the US market, trading it live, I guess on YouTube.
I'm open to it. We do it for internally for our community on occasion, particularly. In fact, I think we're due ATN, so we'll set that up for internally. It's fine. The question I would ask, Ellen, it's a great question. What would you be looking to get out of it? Because a lot of the people who watch, they say, well, watch Mike trade. Well, what? Like his style is it? What we want to do is I want to make sure if we do it, there's takeaways and not just like some of these things on YouTube where people are making like on demo accounts making $10,000 in 10 minutes. I want you to have a legitimate takeaway. So if you would do in the comments, put your comments saying, what would you like to see from that? We'll make sure we tailor make, because I want to do it because I want to give value. I don't want you to do it so you could just like watch Mike or ATN trade. Is that fair enough?
Love it, makes sense. We also do a lot of higher time frame trading. So you do day trading, but for me, I mostly do something on higher time frames. So it doesn't really make sense to go and trade live on YouTube. I've done a few of these like recaps at the end of the week, which I think are higher full, but people don't watch them too much. So it's just the reality of YouTube and the algorithm, I guess.
Yeah, it is. Yeah, no, we'll post internally on our chats and stuff like that. I posted one yesterday. So I was laughing. I go, when Powell was talking, the market was going up, and he go, "You short?" And I said, "No, but these longs are going to pay." Now, I didn't think it would be in 12 hours, but I said these longs are going to pay.
Love it, awesome.
Yeah.
Any questions for Michael? Make sure you comment below. Tell us your questions. I want to hear what you guys think and anything we can help you with. Make sure you comment below. We want to definitely answer that. And we have a bit of time here. And I just see a question coming here from Games asking about with these volatile markets, do you have preferred leverage and stop loss percentages?
Okay, so first on the leverage, I don't even get involved in that. I mean, options have a certain sort of leverage inherent. Stock has what 2-to-1, I think, in the U.S. I don't even know. I just trade like I don't use leverage, so to speak. So that's not really an issue for me. But I would say if you do, I don't think you need it. Keep it small. Like even on FX, whatever your sort of broker allows, even go lower than that. It's really not necessary. Remember, you're making $10 a day, or $10 on a trade. That's going to be 100 and 1,000 if you keep repeating that and scaling up. So don't worry about the money per se. Stop loss percentage. I want to be in a place where the market has to come. It's like the third time I mentioned this. This is cool. Reinforcement. I want to have my stop in a place where the market has to go get me. All right. Now, if that's 3% and my rules say 1%, 1.5%, then I don't take the trade. And there are a lot of times where I have valid trades that are phantom. They don't make my journal because I don't take them because they don't meet the risk parameters. I personally use 0.25%, max 50, quarter of 1%, half of 1%. That's our sort of sweet spot. On A+ setups, I'll go as high as 1, but you're talking 1 of a decent number. So I'll do that. But there's no sort of what's your stop loss percentage. I find that to be, I'd rather you be and this is a risk manager talking. I'd rather you be higher in risk, but be behind a wall that the market can't find you.
How do you define a plus setup? What does that entail?
Good question. Well, there's a few other things, and I'll keep this real high level. All right. There's a lot going on. There's a lot of nuances. But one, the setup, the strategy components have to be there. All right. That's almost a given for anything. Okay. Check. All right. One, there's got to be a market context element to it. Right. What's happening in relation to the prior week's bar? Did we break the prior low? Did we break the prior low and go back into a sort of a range? All right. Are we in a balanced or imbalanced state? And these are sort of, more advanced stuff. I want to make sure. But the third one that becomes the valid A plus, and I know a lot of 7, 8 figure traders, they all have this. Say, we want to see the human element of it, the change. So in my case, I mentioned panic. All right. I want to be in a position where it's not just price that's going to get me there. It's going to be other traders who are wrong, who are going to have to cover, that are going to push me to my target, at least my target one. So I want to see that psychological element. That's usually the one that eliminates the A plus setup because it's tough to measure that. But when I mentioned like M&W patterns, right? Bounces from lows that go right back into like yesterday's range, things like that. If you're short, aren't you concerned? Aren't you nervous? Right? That's where I want to see that. And when price doesn't keep going lower, right? That's where I say, okay, that's it. Like I want to be on the other side because panic is going to drive me to my targets, not some, candle wick or something like that, harami or something. I want to see people's panic driving. That's that third element. That's what makes A plus. And by the way, that trade, that's why it was an A plus setup. That's why I was pounding on the third, fourth, and fifth day. I usually don't add to positions that aggressively, but that's why. How many people were long in the last 3 months, Etienne, right? Everybody was net long.
Yeah.
Buy the dip, buy the dip. Well, it works 100% of the time until it works. It stops working.
Right. I guess for a lot of people, the issue too is when the market reverses that fast, they have to kind of book losses, or maybe just like book profits, like get out in profit somehow.
Yeah.
If they still expect the market to go back up, then how will they want to get out? They will probably want to keep it longer, try to kind of stay around a little bit, hold the trades more, try to buy the first couple of dips until it doesn't work. How do you adapt to that and stay flexible to really what the market is doing at this moment?
Yeah, I mean, I'm always trying to look at the right side. Now, I have to respect long trades like this last year, every was by the dip. I mean, it was by the dip. So I had to respect that, and I would be more cautious of it. So, I mean, I wasn't just shorting the whole way up there, but I was respecting it, but understanding that this sort of Goldilocks scenario of higher highs on ES and NASDAQ not doing it. Everybody's saying NVIDIA's going to 500, right? To me, that's just like buy the dip. You know what? As soon as they start to get nervous, they're going to start to bail. And how you look at it, you can cut to the chase. Let's look at the chart. Red Heiken Ashes tell the tale. I mean, that's it. If you're not sure about it, and there's a lot of nuances that play in it, but once you start see blue, 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 and that red, all right, now I'm going to start getting interested.
If it makes sense. So, any questions? You guys can have a little in the chat. We still have a few minutes here. And Michael, you want to tell people where they can find you and learn from you and also work with you?
Yeah, well, I mean, we're excited about this, new program we have, and we understand that the reason that we want to put this out there is because a lot of the feedback I get is these markets suck. Oh, volatile markets, Trump's screwing everything up. Really? But this is like, it's almost like I don't say a candy store, but it's in fact, you have to weed out the candy. It is a candy store, but you have to be very, particular about it. But we feel, and I'm a big believer in saying, no, this is opportunity, but you have to have solid risk management disciplines and principles. And that's really what we're bringing forward to what we want to do. I see a lot of people saying, oh, FedNets, I'm sitting out. Okay, or this, I'm sitting out. Trump speech, sitting out. I'm not saying trade that minute on a Trump, announcement. But these volatile markets, this is why we live as traders. So come join the party. This is great. Not easy, discipline and risk management, but that's what we're here for. We are specialists in risk management to help you get through this and really see the light at the end of the tunnel here. These are great, great markets. I love these things. I wake up every morning so excited.
As a new trader, it's maybe tougher to see them as good, and you really have to kind of work your way up there. You have to learn the right strategies. As long as you have the right method to do it and to trade it right, then it definitely gets easier, and you can feel better about this market. It's all about having the right methods and knowing, like having the confidence to do it right too. Even if you have the right method, if you don't believe in them, it's not going to work. So it's important to have that. And then as you kind of build your way up to there, you start to understand how good these markets are for these kind of fast trades and fast profits, which are kind of cool to see.
Exactly. Exactly. We try to
So I
strip.
love
The
that.
first thing we do is strip away that emotion of excitement. Although maybe I'm a bad example because I'm excited, but strip that excitement into strategy, math, historical results. Once you get into that bucket, now you're on your way. It's not going to be easy. It's going to take discipline. Maybe it takes a coach to slap you a little bit. That's what we're here for, right? To get you in that mindset and realize, hey, this is opportunity, not problem. And with everything going on in the world, if I had a corporate job right now, I'd be nervous, right? I'd be concerned. I said,
Oh, yeah.
I'm so glad I'm not in that space. And crisis is certainly opportunity.
Love that. Link will be below. The first thing will be for the details of that program that we have. It's going to be open for in a few more days now. You can check it out, have a look at the details. And if you think it's good fit, then maybe have a look at signing up for it. And we'd love to coach you and work with you to get you results with this kind of current market, which probably are going to last for a while. So we might as well get used to it and
Mm.
let's trade them the right way. And then we can kind of tune it down and kind of adjust a little bit more for when market is slower too. And these strategies still work in a slow market. They're just going to be a bit slower to happen, and that's can be the same for all trading, but they do work in all kind of markets.
Mm.
Awesome.
Yeah. And
Unless
all
any
kind of
questions?
underlining too, by
No,
the
go
way.
ahead.
I mean,
Yeah.
FX, the equity markets. I don't trade stocks that much, but I've been a big player because there's just so much opportunity there, and futures, options, things like that. But you may be an FX trader saying, is this going to apply? Oh, the forex markets are moving great. I love them.
Oh yeah, some pairs have been
Yeah.
moving crazy recently for sure, definitely. Awesome, guys. I will take the last question here. We have a question from Red asking about: is the disaster trade funded capital challenge best to use with platform 5 in your opinion? I don't know the
It,
question.
it did. Maybe it's
I'm not sure
MT5
that.
they're looking at, or
MT5 here probably, yeah.
yeah.
If I remember well, we don't have MT5 offered at this moment. We have other platforms which you can have a look at on our website. These platforms are working good. MT5 they're a bit tricky with platforms now, so unfortunately we cannot offer them. But have a look and feel free to reach out to our email, and we'll be able to assist you with that if you want to. So not a big deal. Awesome, guys. Appreciate your time here. Check out the link below for the program on trading high volatility. Sign up if you want to. Have a look at it. Ask any questions you want in the comment section below. And we'll catch you back here in the next live, I guess, pretty soon. We'll see how often we do them. All right. Talk to you guys soon.
Safe
Ciao.
trading all.